Welcome back. I'm Andrew, your crypto guy on the internet, and let's check in on that 20% price move for Bitcoin. Now, my mistake, I got a little excited. I made it seem like that 20% move happens all in one day. It starts today. This is when the 20% move begins. It triggers it. But that whole move takes about 18 to 20 days. And that's based on the BBWP indicator. It's a volatility indicator. It's free. Bollinger Band width percentile. You can get it on TradingView. So just type in, under indicators, type in BBWP, and they have a few different versions. I like Bollinger Band width percentile. Just keep it simple. Gives you a pair of lines that shows volatility, which is like the change of the price, okay? Now, think of price volatility like a spring. When it gets real tight is when there's very little volatility. And this indicator shows that. This is when the spring is super compressed. And look at the price action lately. It's not doing anything. It's staying in a tighter and tighter range. Now, what do springs do when they get super compressed? They have a ton of charged up energy. And as soon as something gets out of the way or there's a trigger point, boom, it explodes. And you get major price movements. Now, the BBWP does not predict whether the price goes up or down. It just shows when volatility, when big moves are potentially coming. And I'm looking at this reading right now, and we're all the way at the bottom. And so I go, okay, sometimes we get close to this and it didn't really mean much, but when we're all the way at the bottom like this, the last time that happened was at the end of last year. And look at it. It triggered this first blue line December 28th, 29th. So think of, and the lines are looking pretty close to that right now. It's like tomorrow it would be nearly identical to what we did last time. So, did that mean that the price exploded immediately afterwards? No. But that was a warning. Like, hey, get in on this, start watching me, because a big price movement is coming. And over that next month, we went from 16.5 to 23.5, 24. So it was the end of December, we were ice cold on volatility, just like right now. And then as January started to play out, middle of January, boom, we started exploding. Look at this price action, all the way up to 24 by the end of January. Really the start of February. So I'm looking at the same kind of scenario here. And I'm going, okay, well, when does the move really start to show? It's usually because something triggers it. And what could that trigger be? The story everybody's waiting on. The debt ceiling. So you have all this money that's kind of waiting for something to happen. They're kind of scared. What's going to happen with this debt ceiling stuff? Is the U.S. going to cave in on itself, or are we going to kick the can down the road a little longer? And we're going to kick the can, okay? They're going to reach some kind of agreement. The deadline is June 1st. On June 2nd, we have no money. So June 1st, or before that, they're going to reach an agreement. So what happens is, this is the Federal Reserve's Treasury deposits. This is their cash on hand. The end of April, we had $184 billion left to play with. Right now, we have about $50 billion, May 22nd. So by the end of this month, we'll have no money left unless they raise the debt ceiling, which lets the Fed sell off bonds and bring some money back in. So what happens then? The Fed is essentially borrowing money from you and I in Wall Street. Anybody who wants to buy a bunch of bonds, you're loaning your money to the government for a small pittance of a percentage return. They get your money and then they play around with it. They continue 8 or 9 undeclared wars, transgender surgeries for minors, whatever they want to do, not your problem, but it means that we keep the business flowing, all right? Now, what happens with that, with the market, is it's a liquidity crunch. All the cash gets soaked up by the Fed. And what do people do to counterbalance that? They sell off their risk-on assets. That is cool tech stuff, innovation, cryptocurrencies, AI stocks, Tesla, Amazon, Google, Nvidia, Apple stock. People are going to sell the fun stuff to fill their own cash coffers again. Bitcoin is not a risk-on asset, but it's treated that way by Wall Street for now. That's going to change here over the next couple of years, big time. But for now, it gets dumped in with the rest of the NASDAQ-y type stuff. And you'll see Bitcoin's price, I think, go down quite a bit. So the order of operations is, this video is brought to you by nobody. Meaning we can say whatever we want around here, but if we want to keep the lights on, maybe pick up a cool mug or a t-shirt from the merch store. At the very least, you can hit the like and subscribe and that little bell notification icon so you never miss a rant. And I hate to ask you to smash that like button, bro, but it does make a difference when we're trying to overcome the YouTube algorithm, which despises everything I say on this channel. And if you want something new in the merchant store, just tell me about it in the comments, and if it gets enough likes, I can just make it. Thank you for your time. Back to the video. So here's how I think it'll play out. The order of operations is the debt ceiling thing, everybody's nervous, price volatility gets super tight and compressed, and then, oh, we reached a deal right before the buzzer. Yay. The Fed starts selling off bonds, this chart goes back up, and then tech sells off, including Bitcoin, and that all happens over the next 18 to 20 days. So I think Bitcoin goes down, along with the rest of tech, to 21, 22,000 even. People are going to panic. They're going to say crypto's a scam. But really, what that is your buying opportunity for some more Bitcoin. That's your DCA right there, that moment, at 21, 22,000, whatever it is. Because then, things stabilize. Okay, the debt ceiling's been raised, we're all still alive, everything's fine. How's Jerome Powell this month? How's the CPI? Right back to business as usual. And then Bitcoin goes back up, along with tech too. It's not going to explode to 100,000 or $1 billion, but it gets us back up to that next leg. With Bitcoin, people are predicting low to mid 30s. 32,000, 35,000, something like that. At the very least, back to range highs, which is like 30,000, 31 at most. So, that 20% move does still happen. Today is the beginning of it. We're coiled up and ready for that explosion, waiting on this major story to resolve itself. I say, now I could be wrong, I'm just a guy on the internet, but looking at all my charts and data, I think we fall first. With everything else in the tech sector, people panic, they calm down, and then they buy back in, and we go above where we are right now. So we're at 27, waiting for something to happen, we fall, and then we jump back up. Okay? Now, I'll be here making new videos as this all occurs, but that's the Bitcoin 20% move that I'm predicting. It happens over 18 to 20 days. You'll see the full thing play out to fruition by the middle of June. That 20% move has already happened, and then we're looking forward to the next thing. Have fun out there.